Hello, I'm Nigel Croft and this is TA for Traders on Monday the 3rd of April. In this short video we'll be looking at the foreign currency cross of the euro against the US dollar. In this we'll be looking at the charts and what technical analysts will be looking at the present time. And what we'll see is that they will be they'll be negative on the medium term picture, but just for the short term they may be expecting a bounce. Thank you. So here we have the daily on the euro, and you can see that we had this very surprising rally which took us up to the downtrend in 200-day moving average. That is a big resistance line on this chart, and as you can see the market went above marginally on an intraday level but closed below, and then has been a bit of a collapse since then. Technical analysts will be looking at that 200-day as the key resistance. You can also see now the market's gone below the 50-day, which is the blue line, and below the yellow line, which is the 20-day. So they would be medium-term negative that these supports haven't held and that the resistance did hold. You can see the RSI has collapsed. Was actually looking reasonably positive going into that 200-day moving average, but is now broken down, is below the 50, and is starting to indicate negative momentum. You'd expect a downtrend to start being created on this RSI. And on the MACD, you can now see it's rolled over. The short-term MACD is now below the longer term, which is a negative sign, and some people would actually be using that as a sell signal as well. So that's the daily picture. On the weekly picture, you can see the rally. I mean, on this weekly, you can see where we've come from since 2014. Very negative picture, all very bearish. The occasional consolidation, but then a collapse, and really, it could be indicative that in fact the rally that we've had recently was just another consolidation level and waiting for the next collapse. The RSI perhaps trying to create an uptrend, but it's not even above 50, 45.88. MACD slightly positive in the short term is above the long term, but the differential between them is narrowing, which is another negative sign. You can see that the euro is finding support on this 20-week moving average, which is starting to form a base pattern. Let's see if that holds in the longer term picture. On the shorter term, this now is a 4-hour chart, and you can see that we're finding support from this red line, which is the 200 4-hour moving average, and we've found support on that for the last 16 hours, which is positive. That's allowed the RSI to start to tick up, although it's still in very low ground, but perhaps indicative of a maybe base building. And on the MACD, you can see here it's now going flat again, a slight potential sign of a base building in progress. A technical analyst looking at this would be hopeful for a bounce off this 200-day, perhaps up to the downtrend in 24-hour moving average, or even the 54-hour moving average. So maybe a move up towards the 107. If it did happen, then they'd be looking at the 107.50 level for the resistance. So maybe indicative of a short-term bounce. But as I said, if you look at the daily, very bad sign that we couldn't go through that resistance, and any short-term rally would be seen on the daily as a negative sign. Looking at the support resistance levels, as I said, the 200-day is key, 108.76. Resistance 2 is 109.065, and to the downside the same levels that we were looking at a couple of weeks ago, 106.001 and 105.25.1. This has been TA for Traders on the 3rd of April looking at the euro. Thank you very much for watching. I'll be coming back shortly with another video on the commodity markets looking at Brent and WTI. So please do stay tuned for that. Please remember, these are not investment recommendations, just my opinions of what technical analysts will be looking at. And do please read the disclaimer. Thank you.